Welcome to the Real Estate of Things podcast. I'm your host, Dalton Elliott. I'm joined today by Andrey Sokurec, founder and CEO of Homestead Road. Andrey is also a best-selling author. He wrote Total Financial Awakening. Andrey, thank you so much for joining me, my friend.
Well, thank you for having me. Appreciate that. I'm excited.
Beautiful. I love it. I love it. We have no shortage of things to talk about. But first, I just want to get the bird's eye view of Andrey. You're in Minneapolis, Minnesota. Talk to me about how you got there. Talk to me about Homestead Road and what your mission is there.
All right. So I came to US in 2004. I came from Belarus, which is Eastern Europe. And at that time, I didn't have any money. I didn't have any credit. I didn't have any friends. And I could barely speak English. I'm still learning it, but it didn't stop me from believing in my dream. And my dream was to build something bigger and better and create a passive income and achieve freedom of time, money, relationships, and higher purpose. So as of today, Homestead Road is a regional company. We operate in 3 offices. We do about 500 fix and flips a year, and we operate in Minneapolis, Minnesota, Milwaukee, Wisconsin, and Tampa Bay, Florida. And we're planning to expand to Orlando and Miami and Fort Lauderdale this year. We have about 89 employees as of today, and the revenue of the company about $120 million.
Yeah, that's incredible growth just for you from Belarus coming over here and 89 employees and massive revenue. You mentioned Minneapolis, or rather Minnesota and Florida. How did you strike up business in Florida? What attracted you to that market?
Well, Minnesota is a nice state, but we have long winters. So isn't it
Yeah,
nice to have an office in Florida?
this is true. That makes complete sense. I think a lot of folks in the finance world feel the same way, right? During COVID, you saw JP Morgan, you saw Goldman, you saw all these groups opening up offices down in Florida. Yeah, it gets cold up there where you are. We were just chatting about the weather beforehand. I'm always curious, like in May, are you still jacketed up and bundled up in Canada Goose? But you said, and you can see behind you here, it's bright, sunny, and pretty out there. So, perfect time for hammers to be swinging on rehab projects.
Yeah,
So,
that's right. But the truth is, like, it's not only about the weather, but in Minneapolis, it's very complicated process to fix and flip homes. We have high regulations. We have a high seasonality. So I just read the report recently. So Minneapolis and Milwaukee is from the list of all the like flip markets at the
mhm.
bottom of the list because we have high regulations, a lot of snow, like you cannot paint a house during the winter. And in Florida, it's much easier to flip homes. Market is bigger, and also like we had a relationship there, and we did a joint venture with a local company. We invested into processes, system, technology. We have software company, not software. We build our own software and as a service. So we everything, all the houses come to the platform and everyone can operate from a cell phone. So we decided in order to protect my freedom of time, money, and relationships and higher purpose, I didn't want to necessarily work more because flipping homes, it's a very highly labor intensive business. It takes a lot of oversight. So that's why we decided to expand through joint venture relationship where we provide infrastructure to do that cost like millions of dollars. And we partner with local guys in local markets who understand the market, but don't have necessarily the technology, the processes, the systems, because most of the guys, like probably decent guys, do like about 50 to 100 homes a year. And you don't need to have super like aggressive process and systems and have a really nice lifestyle business. Uh,
Mhm.
However, when you go to probably about 300 homes, you have to have processing systems. You just cannot operate without technology automations. And we decided to go that route and invested the money. And now our plan, our 4-year vision to expand into 20 markets. So far, like we opened our second location 3 years ago, and like improve the processes, build new processes, and now automated everything. So now it will be easier for someone who wants to join our platform, Homestead Road, to just use our technology and our processing systems and create the same kind of branch and
Mhm.
lifestyle that can be build a passive income. And passive income, what I mean, probably for a lot of listeners, that's what I wanted to do, and a lot of real estate investors wanted to do, is to create a passive income. Passive income gives you freedom of time. And what I mean by passive income, when you don't need to work every day to support your current lifestyle. So you can
Mhm.
focus on your kids, you can focus on your unique abilities, and also help other people along the way to build the same thing.
Yeah, you are a builder, right? And talk to me about how you got into real estate investing, right? Because you said you came over to the U.S., didn't have any money, and you have built really an empire for yourself. So how fill in the gap there? How did you get from A to B, A to Z, really?
Well, thank you for your compliment, but I cannot take credit for building the company myself. I have a great partner, but also I have great partners inside the organization. Like now, like we have like 89 employees, like, and like people being with me from a lot of people from day one, and
Hmm.
so they helped me along the way. So how I got started? My background is finance and accounting, and back at home I was working as a financial analyst at a large bank, and I love the numbers. And when I came here, it's kind of weird, but like I was basically unemployed. I didn't really speak English. I didn't have any work experience, so I had to work in construction and swing the hammer like
Hmm.
for 3 months before adapting, and that was a very humbling experience. Um, and then I decided to go and start doing loans. I don't know if you remember, but at that time it was super like popular profession to be a loan officer, and I still remember I closed my first loan and walk away with $16,000 in commission. I remember like I did uh, a loan with a negative amortization. You could charge 3 points from front, 3 points from back, and I was thinking that American dream is right here. Like I already achieved it. I can close 3 loans per month, and like I make a lot of money. It didn't
Yeah.
last long. When the market crumbled, my commission fully disappeared, and I had to find something else. And I like what Winston Churchill said. He said, "An optimist see an opportunity in every challenge."
Mhm.
And I saw that real estate crumbled, and I started buying rental property. So I and my partner and I, we bought about 100 rental homes in like bad part of towns, transitional part of towns,
Mhm.
and we didn't have the money, so we had to go to hard money guys and paid 40% interest, which is ridiculous amount, like the interest.
Yeah.
However, you buy a house for cash, you stabilize, and then our plan was within 6 months to refinance with a local bank and get normal like 5% rate at the moment, and build a
Mhm.
lot of joint venture partnership, knock on a lot of doors, find people who want to invest with us. That was a lot of knocking on door uh, activities, and at that time no one wanted to listen about real estate because people burn out.
Mhm.
But I think if you don't step forward, you're always in the same place. But and we had to build that rental portfolio, and that created really great passive income and real nice lifestyle. Like my goal was initially to buy. I calculated that I liked what Stephen Covey said. You need to start with the end in mind, And my
Mm-hmm.
dream income was at the time, I wanted to buy 10 rental properties so I can generate, when it's paid off, I can generate $1,000 per month in net income, make 10 grand a month, and that was a good income. But
Mm-hmm.
however, your lifestyle expenses changes over time. Like kids go to private school, and like you go to nicer neighborhood, and like you want to have better vacation. So it changes over time.
Right.
So I need to buy, not I need to, but I wanted to buy more houses and have a nice lifestyle. But I also believe that it's important to have a budget in place and live below your means. And if you don't have the money, don't spend the money. Because like being a loan officer, I saw so many people making good income, but they buy expensive cars, they buy houses, and they basically like one paycheck broke. And that's what
Yeah.
exactly situation that I describe, like my journey, how I transitioned from being a loan officer to become real estate investor in my book, Total Financial Awakening. Just it has the same um, blueprint, the process, what I've done, transition from loan officer to real estate investor, and then building a business.
Yeah, you have to watch out for that lifestyle creep. For most of my time at Lima One Capital, where I currently work, I built out our mortgage broker channel, and I've heard a lot of stories over the years of folks who were, at uh, Countrywide, other shops before the crash, and they tell a similar story of, whether it's themselves or people that they were around making, well into the six figures. One guy told me, he was like, if you were making less than $250,000 a year, you were just not showing up for work. He was like, money
Mm-hmm.
was just being printed. But that's it. Is like a lot of these folks were spending it, in one pocket and then immediately out. And so keeping those fixed monthly expenses low, being mindful and knowing that, especially in this space, like if you're in real estate, it is cyclical, right? It's not, the crash showed better than at any other point that, there are ups, and generally it's going to be up and to the right, but there are going to be downs, and you have to prepare for a rainy day. And if you're not, you're going to be in a world of hurt whenever that rainy day comes.
Yeah, that's
So,
right. Like I think we're blessed to live in this beautiful country, because coming from another country, and as a kid I lived in Spain and Italy, like, and in my home country people still making $500 on average per month. And if you think about that, people thinking, okay, how can I save additional amount of money? Well, just like set aside like 10, 20%, 25% of your income, create a uh, automatic deductions, and build a budget and monitor your budget, or start investing early. And think about the power of compound interest. I like the rule of 72. So basically, if you invest the money, let's say at 10%, and you divide 72 by your interest that you get, and it will show you the number of years when your investment will double. Example will be if you invest money at 10%. So 72 divided by 10 is 7.2. So it means that in 7.2 years, your investment will double. Well, what if you invest money at 20%? At 20%, your investment will double in 3.5 years if you use compound interest. So that would help me really to start setting money aside early, and understand the power of compound interest, and put like Excel spreadsheet. The
mhm.
early you start, like if you have any young people, so that's the advice that I got from my mentors. Hey, like start buying that rental properties early. Like if you're 20 years old and you buy one property per month, and by 30 you already have 10 properties that can be easily paid off. Like if you have your mortgage probably will stay the same, or but your rent goes up, and if you ever need the money, you can cash out, refinance, and pull the money tax free. And that mentality, really, if you see the end of the game, like when you build passive income for yourself, like you should start doing early, or
Mhm.
have a discipline to set the money aside, to live within your budget, and like probably don't buy the things which you cannot afford. Like when you can afford, then you go ahead and buy whatever you want. But I see a lot of people, as soon as they start making a little bit money, instead of buying rental property, they buy nice cars, which is depreciates an asset in my mind. Like buy a more expensive home right away. Well, like what if you buy rental property instead? So that was the mindset that helped me to propel in my investments.
Yeah, there's some delayed gratification there, right? Which is not always. It's probably never the most fun thing. It's not always the easiest thing, but yeah, you always have to have kind of a weary eye to the horizon. You can't, yeah, you can't just completely live in the present there and all fun now. So, so switching gears a little bit, you have really been a rocket ship, and the growth continues. So these markets you're expanding into, what markets excite you the most right now? And we're in, like, in our current climate, it's strange. Like, housing is very strong. There's a shortage of units. Construction hasn't fully caught up with that. You have rates rising. There are so many more variables that are just wonky and all over the place compared to, the last, call it the 5, 10 years pre-COVID. Now it's all over the place. So what markets are you most excited about? And then kind of a follow up question: are there any markets that are starting to be of any concern for you, or you're tightening? Maybe you're tightening your kind of underwriting approach there when you're looking in that market.
Yeah, that's a great question. So for me, my goal is to work less. I don't want to work more.
Yeah.
And I also learned the less I work, the more I make. I learned from the gentleman named Dan Sullivan, strategic coach, and he has a great mastermind group, strategic coach that I highly recommend. Been in his group for many years, and what he taught is like, okay, how you can work yourself out of your operations and work and create the freedom of time. So to answer your question, I'm not looking into new markets. Like I only want to go through expansion, like doing JVs with other people and
Hmm.
help them to generate, let's say average location probably can make, I don't know, from $500,000 to $2 million as a branch. And if you have proper, it's like a recipe. If you have a right recipe for chili soup, you're going to make it right. And
Yeah.
if you try to do it yourself and you don't have your health, you have all the ingredients, but you don't know the sequence. So what we build a recipe for expansion, and my goal is to fulfill my personal personal my personal mission statement is to help other people achieve their freedom of time, money, relationship, and higher purpose, and create the partnerships. I like to do JVs with people. We do JVs with wholesalers where we partner with them on a deal. We finance it 100% and we split the profit. And I like this kind of deals. I don't like to do it all myself because you can have a 100% of your small pie, or you can
Hmm.
have like a lot of small pieces of a much bigger pie.
Yeah.
And that's what my philosophy right now is, not to work more because it takes a lot of time and efforts to build something from ground up. But someone who, like, the prospect would be for us as a partner, someone who has a corporate job, makes good money, knows how to run a business, but we can give all the processes and the IP, how to do the business. So that's the model I see that can flourish.
Yeah, and talk to me about your appetite right now for rehabs versus rentals. Are you kind of solely focused on buy, fix, sell, kind of the rehab side right now?
Yeah, right now, Dalton, we sold our rental portfolio about like probably a couple of years ago.
Mhm.
We had to pay a lot of income tax. That was the first realization. My second realization, I went to Ecuador and did ayahuasca and like spent 2 weeks in a tribe and kind of look back and like, okay, what's the next step? And I decided that the best way to grow is not to work more, but to work less.
Mhm.
So then that's what I want to do.
Right. I'm gonna pick your brain about that Ecuador trip offline.
All right, like we're happy to share.
Yeah, I would love to. So, talk to me about Minneapolis, right? Like, I've never been to Minneapolis. From what I have heard, or what I can see, the little bit behind you, looks like an absolutely beautiful market. But talk to me about like, what do you love about it? Where's the market heading? Just give me the rundown in Minneapolis.
So Minneapolis is a very strong market. We have a lot of Fortune 500 companies like Target, Best Buy, 3M, Health Partners, and a lot of Norwegians moved here a
Really?
couple hundred years ago, and it's a strong market. But also, it's hard for from a fix and flip perspective because a lot of regulations and seasonality. That's kind of like we like to flip a home. Like you have to have a point. It's called truth in housing report. You have to. The city will inspect your house and they will tell you what you have to do. And as soon as they inspect your house, you have to pull the permits for electric, for plumbing, for everything. Whatever they say that require permits and work, you have to do. But other than that, the market is very, very strong. A lot of people, in spite of cold weather, come here because those conglomerates attract a lot of highly skilled workers.
That
So in
makes
terms of rentals, like this market is very strong in rental market, but cap rates not so strong. That's why we decided to sell our rentals and not to not to buy anymore.
Mhm.
But what we expected that market is going to correct itself, but it didn't happen.
Mhm.
And we had the use of capital to reinvest money into our business. But now with the market like potential recession, like 9 to 18 months from now, no one knows for sure. That will create a lot of opportunities. Like if you think from that standpoint, as soon as you don't get, that's our strategy, don't get into long-term projects right now, because if we still believe real estate will be really strong,
Mhm.
but we don't want to go into like 1 year long projects. We want to go into shorter projects, and when market corrects itself, like then we can replace inventory really easily, sell inventory, like if you need to sell them at loss, and replace with cheaper inventory. And you have to do it really fast. And like I know it because I bought my first property in 2005,
Mhm.
and at that time I was thinking I got my American dream. uh,
Are you are you looking to sit on more cash now than you would normally? Just with your eye to the horizon and where you feel that we're going, just as a as an economy.
Yes, like we have substantial cash reserves. Like we don't need the money right now, but we put together two funds, one fixed and fixed rate fund that
Mhm.
we advertise to public. Another one is equity fund. So when the time comes, like we're already prepared to buy rental properties because we'd love to buy more rental properties, but the cap rate get compressed so much. It's not worth from my standpoint in my local market. Probably other markets have a much stronger cap rate, but Minneapolis is like 5% cap rate. Like I'm not really excited about 5% cap rate.
Yeah.
But if we get prepared. If we're going to have price correction, we're ready to buy. Like I probably would buy thousands of homes.
Mhm.
If the cap comes back, so like 8%, 9%, I would like. I still believe real estate is the best investment tool or financial tool you can invest.
Yeah, no disagreement there, and I just from a personal standpoint agree on yeah, more cash on hand now as a percentage as opposed to 12, 24, 36 months ago. Just so much uncertainty, and I don't think anyone's expecting a drop off the cliff for housing, right? But the last couple of years have just been wild. That's probably the easiest word to attach to it from an HPA standpoint. Rent growth has been absolutely crazy in almost every market, and now we're starting to see, just as a global economy, more headwinds rearing their ugly head. Whereas it was shooting fish in a barrel. It felt like for the last couple of years, in spite of a global pandemic, like housing and real estate did the opposite of what people thought it was going to do. I remember the first couple of weeks and months whenever COVID hit, like March 2020, April, May. It wasn't really until June that I think the industry started to feel comfortable and like, all right, this is a healthcare issue. This is like oversimplifying, right? But this is a healthcare issue. This is not a housing issue. COVID is not a housing issue. People were looking back to 2007, 8, 9, as soon as COVID hit and lenders kind of halted lending. Everybody went to lockdown. I think everybody was waiting for the shoe to drop, and it didn't. The exact opposite happened. It was just fuel to the fire, and housing went up and to the right. So I think the only thing that anybody knows the next, like you said, 10, 12, 24 months, it's going to be interesting, and it's anybody's guess on exactly how that plays out, but it's not going to be like the last 12, 24 months. I think that's probably the only close to certain thing you could say, right?
Yeah, that's right. From the other hand, like we still have a lowest amount of supply of homes.
Mm-hmm.
Like we operate in the first-time home buyer category, so we have right now 0.5 months of supply. Balanced market considered 5 to 6,
Yeah.
and people still need to find the way where to invest the money because, like, to simplify, like this is a global economy situation. Like if we had a healthcare issue, we had a social issue, and then because of the COVID, we have so much constraint on supply chain. The big corporation, they didn't produce the results because of that. Everyone look at everyone's financial reports, and because they don't produce the financial outcome, the stock market goes down, and now we see another causes of the crisis is a China lockdown, the war in Russia, Ukraine,
Mm-hmm.
and that will obviously will lower down the expectation. And you see stock market went down, but people need to invest somewhere.
Right.
So we just, no one knows for sure, but we really cautious. And I would say what our strategy is to be prepared. Like we cannot have oops, okay, if the market goes down, okay, what's your risk mitigation strategy? What's the plan B, plan C, and plan Z, right? Like we have infrastructure to convert the properties into rentals. We start negotiating terms on a long-term financing with our banks. And now if we cannot sell our houses, market drops significantly, we can convert our fix and flips into rentals.
Yeah.
And we already have pre-negotiated terms with the banks for long-term financing. So I think it's important right now, like people who didn't go through the ups and downs for 2010 crisis, and think that real estate only go up.
Yeah.
You should have your strategy in place.
Yeah, backup plan, backup plan, backup plan. Always, like
Yeah.
you said. So, Andrey, I can't thank you enough for joining me. We could go on for hours. I feel like I'm going to pick your brain after this episode a little bit too. Total Financial Awakening is the name of the book. Go get it. Go read it. Andre, thank you again, my friend. And I'm going to have you back on and catch up later in the year. Just see how things are going for you and the team.
All right, Delton, it was my pleasure to be here. Thank you.
Thanks so much. Thanks, everybody, for listening. Take care.